Guys, welcome to episode 3 of the SaaS Sales Misfit podcast. Podcast that brings you up to speed with all the big things that's happening in the world of SaaS today and what that means for you, the SDR, and of course you, the AE. Let's jump straight in. The lay of the land. Whilst it looks like the SaaS industry is growing, it's not quite as simple as more investors equals industry's booming. We're going to take a deeper dive. This week, we're introducing Neil's numbers. Salesforce cut 4,000 jobs. Salesforce CEO confirms 4,000 layoffs because I need less heads with AI. Why is no one talking about this? Or maybe you guys are talking about this. Either way, we are definitely going to be talking about it today. Also, what no one is telling you, corporate taxes, what does that mean for SaaS companies? And equally or even more importantly, what does that mean for you sales reps? Plus, this week's tutorial, it's all about the question, what would I ask on my discovery call as an SDR in 2025? Not to be missed. First, the SaaS industry is growing. Overall funding is up, but it's super concentrated in one or two areas. What do I mean by that? Well, look, there are some reports that show an increase in total VC dollars invested in SaaS, but this is often driven, guys, by a small number of massive, and I mean massive, multi-billion-dollar ultra rounds. For example, Klarna, we saw that 3 weeks ago. They secured a $1.6 million backing. And then we've also got the largest private tech deal on record that happened in 2025. OpenAI closed $40 billion funding round. That was Q1 of this year. Absolutely massive. And they're not the only ones. We had another big one, Scale AI, $14.3 billion closed in Q2 of 2025. That was raised, rather in Q2 in 2025. Then you've also got Genesis, $1.5 billion a couple of months ago in July. Can you sense the theme, everyone? The AI gold rush. The primary driver for the increase in VC funding is the immense interest and investment in AI-driven SaaS companies. We've been talking about this for the last couple of episodes. But if a company is not directly leveraging AI, it's facing a much tougher funding environment. That's a fact. Every week there is news on investments in platforms that have AI at their core or AI as an offering. And this week is no different. Alpic grabs $6 million to launch first MCP native cloud platform for AI agents. We're seeing a big rise in that agentic AI space. Obviously, we're going to talk about that in more detail when we get onto the Salesforce story. But this is what I mean by it being concentrated. Yes, there's some massive multi-billion-dollar rounds, but that's happening for a small amount of companies, which is skewing the actual figures, if you like, because you see it on the surface as, well, there's huge investment. There's increase in investment year on year. SaaS must be booming, but it's only a few select businesses that are able to raise these multi-billion-dollar rounds. Most businesses, especially startups, are struggling. Again, if you're not leveraging AI, you are struggling to get investment. Why is that? Why has there been a shift from early stage to growth stage? Well, VCs are becoming more cautious, right? They're putting their money into more mature growth stage companies, Series C and beyond. And why is that? It's because they have a proven product market fit already. Right. And in a volatile environment and market like this, VCs need a bit more guarantee or a bit more stability or a bit more confidence, rather, in knowing who they're backing rather than hitting those early stage startups, especially if these early stage startups aren't leveraging AI or don't have AI at its core. And so in truth, the total number of deals has actually decreased. Right? The deal sizes may have increased, but the total number of deals have decreased. And that means that a few companies are getting a lot of the money, as I just said, while many are struggling to get any funding at all. The growth at all costs mentality of the past is gone. Investors are now scrutinizing metrics like revenue retention, capital efficiency, and profitability. Companies that can't demonstrate a lean and efficient operation are just not getting funded. And what does that lead to? Well, it leads to layoffs. And speaking of layoffs, Salesforce cut 4,000 jobs in their support division. CEO Mark Benioff revealed on a recent podcast that his company has used AI agents to replace around 4,000 customer support division employees. Now, here's the official narrative, yeah? Because he made a statement a few weeks ago that that's not going to happen. It has. The AI efficiency justification from Mark is basically that agentic AI is now doing a significant portion of the work, and that's basically allowing the company to need less heads in its customer support division, right? So the public story and the public narrative is AI is so good, it's making humans redundant. So is that really the case? Well, we're going to dig down into that. But as I said, the announcement comes just weeks after Mark told the 2025 AI for Good Global Summit that AI wouldn't wipe out jobs. It wouldn't lead to cut jobs. Instead, they were going to work together. But now AI is so good, you know what? I can actually lay people off. Yeah, I can save money. And that's now the official storyline. But let's look at how many jobs have been cut, right? 4,000 right now. Don't forget the 1,000 that were cut at the start of the year. But the 4,000 itself is a reduction of over 40%, right? In one division. That basically makes this the most dramatic AI-driven job cut in SaaS history. Now, the timing is interesting. As I said, the official storyline is I need less heads because AI is so great. But Salesforce just reported a strong quarter and then issued a weaker than expected forecast. So guys, how do you offset that? Cut jobs, right? Hey, you got to keep the investors happy, right? The hypocrisy of his statement and the complete contradiction of it is not lost on anyone, right? In fact, I don't even know if hypocrisy is the right word, but the contradiction of his statement that AI will augment workers isn't lost on the fact that he's literally then just turned around and gone, well, actually, they're doing such a great job, we don't need them. But is AI a scapegoat here? What do I mean by that? Could this be a super convenient excuse for companies that overhired during the pandemic? The AI efficiency, or should I say the AI efficiency narrative, is perfect, right? To spin layoffs as a strategic forward-looking move, rather than basically what it could be, which is a painful correction. And a lot of companies are going through that, which is there was a lot of hiring and overhiring during the pandemic. That means there needs to be a market correction. We spoke about this in last week's episode. Or are Salesforce doubling down on AI? Now, we've actually covered this in the last couple of episodes. Yeah, we've spoken about AI native CRMs are on the rise. They're getting funding, and maybe they are providing a real threat to legacy platforms like Salesforce. We saw last week, Oracell raised money. We saw the week before, Attio raised Series B funding, $52 million. If this is the case, and they're providing a real threat to Salesforce, and as a result, Salesforce needs to delve even deeper into their AI offering, Einstein, what does this mean for the remaining Salesforce workers? Let's watch this space. Now, in other news, corporate taxes and SaaS. Governments are raising corporate taxes to manage inflation and debt. We know that. Well, that's the official storyline anyway. Now, SaaS companies are feeling the impact. Why? Because they rely on capital, they rely on funding. A lot of these businesses operate also across multiple countries. So what is the actual impact? Well, the rising tax burden combined with the current funding climate is creating a super challenging environment for most SaaS companies, if not all. Here's what it means in reality. Shrinking profitability. A higher tax directly reduces companies' net income. For SaaS startups who are already operating on super thin margins, most of whom are or some of whom are not even yet profitable, this can make the path to a positive bottom line even more difficult, even more almost impossible. It puts extra pressure on them to be hyper efficient from day one. No settling in time, no grace period. They need to be efficient from day one because that is what aligns with VCs and investors today. Higher taxes can also decrease a company's post-tax returns, making it a less attractive investment for VCs and investors. This can lead to a reduction in the available capital for reinvestment into growth initiatives such as R&D, marketing, hiring. You're seeing this in a lot of businesses. Yeah, marketing spend is getting cut back. Hiring is on a downward trajectory. They're expecting more from less reps. The global minimum tax adds a new layer of complexity for SaaS companies as well that operate internationally. They now have to navigate a maze of different rules and may be subject to additional taxes if their operations in a specific country are taxed below the 15% minimum. That makes international expansion more complex and guess what? More expensive. Now, the focus on efficiency and profitability can lead to a reduction in headcount, which is what we've talked about, which is what we've been seeing last week. We saw 36% of businesses had cut their SDR teams down, 25% businesses cut their AE teams down. When a company is squeezed by both a tough funding environment and a higher tax burden, where's the first place they're going to look to cut? The labor. And that is what has happened, right? Salesforce, they've cut 4,000 staff. Other businesses across SaaS we've seen made major cuts in the SDR and AE space. And let's be real, guys, tech layoffs aren't slowing down and corporate taxes aren't going away. In fact, they're just adding fuel to the fire. SaaS companies are already under the microscope. Investors don't want fairy tales anymore. They want profit, they want discipline, and they want it all yesterday. Here's the truth, guys. When governments implement these corporate taxes, a lot of businesses don't stick around out of loyalty. They up and leave. They take their cash with them and off they go to a tax haven somewhere abroad. Yeah, they take money out of our economy. Or the ones that stick around cut jobs. Again, they operate more streamlined, they spend less money, reducing the amount of money in the local economy. You've heard that stat. Millionaires are bailing on the UK by the hour. That's not a coincidence. That's what happens when clueless policymakers think raising corporate taxes equals free money. Spoiler alert, it doesn't. So where does that leave you? If you're an SDR or an AE, you need to sharpen your skills, drive results, and make yourself impossible to cut. Because in this market, there's no middle ground, guys. You're either indispensable or expendable. Now, basic discovery like how many is on your team or what tools are you using is going to kill you in this current market, guys. Qualification checklists get you absolutely nowhere. Vague questions like what's your goal? Just to tick a box in the hope that they say yes to a meeting, even though you know they're just saying yes to get you off the phone, is the fast track to the exit door. You're thinking too narrow and you're going through the motions. That's the kind of stuff that gets you fired today. The lazy discovery days are over. Here are the type of questions I would be asking if I was an SDR in this current climate. Now, I'm using a framework I call the 3 C's. So, what do these 3 C's stand for? Number 1, the current state. A lot of you would have heard this terminology, SDRs, AEs. If you've read the book Gap Selling by Keenan, you understand that he talks about the current state versus future state. For those of you that haven't read that book, read it. It's an absolute must for all sales reps. The goal here is to uncover what is happening now and to go beyond the surface, right? You need to ask about reality here. So questions like, walk me through your team's current process. Where do things tend to break down is a great question. Most people stop at the first bit. Walk me through your team's current process. That's all well and good. But when you add the where do things tend to break down, that transports your prospect directly into their sales team's current process. And then they are taken to the exact point where things break down, which means they can get more specific with you and you can get a better understanding of what exactly is going on and where exactly things are falling apart in their process. Another great question. What's the number one blocker slowing your team down this quarter? Specific. Not what are your team struggling with these days? What's the number one blocker slowing down your team this quarter? Specific. What are you doing to solve this right now? Are they doing anything? Let's find out. What are you doing to solve this problem right now? Your job here, guys, is to understand. It's not to pitch, right? So that's the current state. Then, number 2, cost. We want to make it hurt. If you don't tie the problem to an impact, it's just noise. You've done nothing. If you highlight a problem, but it's not linked to an impact, guess what? The deal doesn't go anywhere. The meeting doesn't get booked. So, how do we tie the problem to impact? How is this affecting your team's ability to hit targets? They've got targets to hit. You've highlighted a problem to me. How is it affecting their ability to hit target? Super important question. What's this costing you in time, budget, or headcount? You want to find something. Remember, you want to find something you can hang your hat on and drill deep and then hit your prospect over the head with it, as we've discussed. Is this impacting other departments? So important to tie the pain to the wider business. If you can link departmental pain to the wider business, that's when your deals become more sticky. That's when your deals go from that 5 to 10K little tire kicker to 50, 60, sometimes 100K deals. Tie the business impact, or the pain rather, to the wider business. And what impact does it have on other departments? What happens if this doesn't get fixed by next quarter? You only get 4 quarters in a year. You can't afford to sit quiet and let 3 months go by. And if you do, what impact is it going to have? If you don't fix this problem, what is exactly going to happen in the business? Get them to verbalize the consequence. That's actually what builds urgency, not you verbalizing it, them verbalizing it. Does that make sense? Tie the pain to money, tie it to time lost, tie it to growth bottlenecks, tie it to impact, and then get them to say the words out loud to you. Far more impactful than you saying it to them. Number 3, the third C, change. This is their future state. This is where we get them to visualize the win. Shift the frame and make them imagine what the other side looks like in real time. Let's say we fix this. What opens up for your team? Great question. Because now you're actually transporting them to, hey, problem solved, problems fixed. Now what can you do? Yeah, what does success look like in 30 days? How would your week change if this problem disappeared today? What would you be able to do? What would you be able to stop worrying about? What a great question. Everyone's got worries on their plate, especially decision makers and senior heads in a business. If you can take one of their big problems off their plate so they don't need to worry about it, that is a huge load off their shoulders. Now get them to verbalize what it is that they can stop worrying about and start focusing on and start being more productive on. Yeah, how does your week change if this problem disappeared? What does better look like? You're helping them sell themselves on the solution, both emotionally and logically. Now, I've got an extra step here because a lot of SDRs and AEs will start this on their discovery. And then when they get an answer, they go back to shallow discovery. That is not the way to do it. You need to use follow-up questions, and you can use these on pretty much any question to dig deeper. Can you expand on that? If you don't understand something, you want to tell them straight off the bat, hey, look, I'm not sure I quite follow. Can we just break that down a bit? And if they give you a short answer, the same thing. Can you expand on that? Because you could ask the perfect question, but that doesn't mean they're going to give you the perfect answer. So don't just think you've done your job and, well, I tried, I asked them, and this is the answer they gave me. Push back on it. If the answer's not a full, complete answer, or it doesn't provide much insight, John, appreciate your response. Do you mind expanding on that a bit? Great follow-up question that can pretty much sit on any question. All right? Why or why now? And why is this important for you right now? Well, we need leads. Okay, great. But why now? I'm assuming you needed leads 3 months ago, right? Well, what's changed in this business right now, in your business, to make this a priority for you? The why now technique is still super powerful. It still is super important in today's market. More than ever, use it. What's been tried before? Great question. We want to know what's been tried before, because they might not have even tried to fix the solution before. Okay, why have you not tried to fix the solution? It's such a big problem. We've just discussed that. Or maybe they don't even realize it's a big problem, in which case you need to now go back a step and show them why it is a big problem. Or maybe you've misunderstood and it's not the real problem. Maybe there's another problem underlying. You need to dig and ask more questions. What makes that frustrating? You ask a blinder of a question, you get a response. Follow it up with what makes that frustrating. You're tapping into emotion here. You speak to a leader and they've just highlighted an issue. You then follow it with what makes that really frustrating for you right now in terms of your role. Now you're tapping into their emotions. This is where gold lives. What's at stake if this isn't fixed? What does it say? If you don't fix this, like, what happens? Well, we don't get our Series B funding. Okay, cool. So if you don't get your Series B funding, that sounds pretty detrimental, I'm assuming, to a lot of jobs. Would your team be affected? Would you be affected? These questions, they deepen the conversation. The first ones open the door or get your foot in the door. The second ones, these follow-ups, are the ones that push the door wide open. All right. These are the ones rather that you want to be using, because they pull out gold. And guys, I have so many more of these. So to help you out, I've put together a list of my personal 50 killer discovery questions, just like these. And best of all, they're completely free. The link is in the description. Click on it now and download your free copy. Right, guys, that's it for another episode of the SaaS Sales Misfit podcast. Hope you enjoyed it. And if you did, then please like and subscribe. It means I can reach more people and continue helping those that need it most in this current market. Now, before I go, many of you have been talking about the lack of email open rates you're getting currently. So if that's you, then click on this video here, which is all about how to write the best email subject lines that cut through in 2025. See you all next week.